It is 11:45 by exact time in London, October 3rd, 2012. This is a really short video on the basic RSI reversal that I discovered for myself, but it's a part of standard technical analysis. And I've improved on the whole methodology by then going on to define all the locations for this signal. And I have quantified RSI by looking at delta RSI, which is just the difference between the RSI peaks that correspond to the price peaks. When it's more than 5%, it's a good signal. And I've also developed a technical indicator that I call price deceleration, which also quantifies RSI divergences in the classic signal and the double bottom, double top signal. And that then relates to probability. The stronger the PD value, the more probable a price reversal when the market is outside the range and on a technical level. The stronger the divergence, the delta RSI in a double top, double bottom divergence on a technical level, the more probable a price reversal. It's a simple supposition that I've formed. So classical physics, acceleration equals delta V over delta T. RSI is a momentum oscillator. It is synonymous with velocity. So we can do price deceleration is equal to delta RSI divided by delta time. The RSI signal has a start and an end point, which I call time n and n plus 1. So delta time is just the number of candles between n and n1. I don't count the first candle, so it goes 1, 2, 3. So when PD is greater than 1, it has an edge. So let's look at euro dollar very quickly. We'll go to the monthly chart first. So look, there's a bunch of possible points for a price reversal. There's double bottoms and technical levels. There's just day lows and technical levels, trend lines. My cluster strategy, confluence of both. The double bottom at cluster, or even more confluence, where we have like a pivot, a support and a trend line, and more than likely you will see a bullish divergence in that location. So if we look at the monthly chart, which I did have up, I think it's right here. Oh, that's annoying. My hotcom closed it. No, that's non-farm payroll. So the monthly chart, the monthly continuation chart for Euro futures is really bullish. It's not really important that you see it, so we can skip it because I don't have it on my screen right now. So here's the Euro daily chart. You can see we've bounced, we've made a high, we've come back to exactly the 50% fib level, where more than likely there's a bullish divergence in the 1 hour chart there. So you can see how bullish it is. So look, this day we're going to look at in the 5 minute and the 1 minute, so you know we've come off the low, so you know what happened. But let's pretend you don't know what happened, and we're looking at the signal as it's set up. So here's the hourly chart. Here's the start of the week, October 1st. We've got a low to the high, and we come back, so we have a fib level. So we're bang on the 50% fib level. Markets are fractal, so a pattern that's in the inferior time frame will be seen in the higher time frame. A pattern in this time frame could be seen in the lower time frame. So we'll go from the 1 hour chart to the 5 minute chart. So here's yesterday's low. That's the low on October 1st. The price is spot 2879. So look, price is dead on it. Well, let me scroll ahead because you got to see the next candle to see the tag of those levels. Okay, so you can tell from the shape of the candle that long wick, we bounced off the level. So again, you know what happened, but suspend your disbelief or just pretend you don't know that. So we're on the 2-day fib level and the past low. But look, RSI price is flat. RSI is down. That's called a hidden divergence. Now, I already use regular divergences. This is called a reverse divergence. I don't use those. Andrew Caldwell made those up. But that's a reversal indication. Because if price is flat, RSI should have been flat. So the peak that's there, this second peak should have been there. So it's showing you a possible reversal. But let's ignore that signal because I don't use them. So let's go to the 5 minute chart right there while we're testing the previous day's low. So here's the 5 minute chart for this morning. The candle at the present moment where the frame is locked. Let's pretend that we're back in the past. We're seeing it as it sets up. That candle you can see is 810. And delta RSI between time n and n plus 1 is plus 10%. That means there's an edge that we're going to see a reversal. And look at the technical levels. The past low, support 1 pivot, and the fib level from the 2-day swing is right there in the mix. That's 3 levels there. Look at that trend line support. We'll look at that trend line afterwards. So that trend line is not important. That's the second point. So I connect 2 points to look for support in the future. The third point has predictive value. So look, I've connected. Let me get my ruler. without having to render the screen. Let me get a piece of paper. No, here's the rule. Look, I've just connected. You can see, the past low and the current low. So that's a potential trend line. So we're seeing evidence of a price reversal at a day low where a price reversal is expected. Sorry I'm going slow, but this is also for my sister. I'm trying to teach how to trade. So here is the 1 minute chart. The RSI signal in the 5 minute chart was between this peak and this peak. But like I said, when it's a high momentum price reversal, the signal is shifted forward in time. So the signal in the inferior time frame will start between time n and n plus 1. So look, this signal here is plus 17% on those two levels. The past low, see, past low, support 1, and I normally don't count this new candle that's inside the range, so the RSI truly is between this candle, and there is a divergence, but because that is out by like less than a tick, it's insignificant. So there's a huge momentum change. And let's look at the price deceleration. Remember, PD is delta RSI divided by delta time. So if I get the ruler function, you just go on this little feature here, you go left click. All charts might have a ruler function, most of them. And I just put my mouse there at the start of the signal, and I left click and I drag it across, and there I can see the middle number is 11 delta time, 11 candles, and 16%. So 16 divided by, say, 10 is 1.6. So call it 1.7. Well, let's work it out. 16.8 divided by 11. It's like 1.8 PD. Look, 16.8 divided by 11. Oh, I'm sorry, I'm being a plum. 1.5 price deceleration. And if we go back to the 5 minute chart, you know what happened because you're watching this video today and you know Eurodollar bounced. My buddy took this trade because I taught him this. Look, we bounced from, spot 2878 all the way up to spot 2935. So we're up, 54, 55 ticks. And you could have risked maybe just 10 ticks with your futures account just outside the range. That's, if you risk 10 ticks and make 50 ticks, that's a 5-hour trade. So that is a high momentum price reversal, and what I mean by that is that there was RSI divergence more than 5% in the 1 minute and the 5 minute charts. Look, I've ranked momentum from 0 momentum price reversals. There's no RSI divergence in the 1, 5 hour or daily chart, and the signals can be less than 5 or more than 5. So as the signals switch between less than 5 and more than 5 and creep into the longer time frames, we're seeing stronger momentum change because, if you see bullish divergence in the 5 minute, hourly, and the daily chart at a strong daily technical level, that's what I call fractal divergence. So you can see, like in the daily chart, we're pushing up to a key level, we're slowing down. The hour chart, we're slowing down. The 5 minute, we're slowing down. That means to a high degree of probability, we're going to see a price reversal where we expect one. It's intuitive stuff, really. Hard to spot, but that's it.